What if everything you were told about retirement was designed to benefit them, not you? The 401k is the most pushed retirement plan in America. It's on every job application, every HR packet, and every financial commercial you've ever seen. But here's the real question. If the 401k is so effective, why do so many people still retire broke or scared they'll run out of money? And why has almost no one heard of the infinite banking concept, even though banks, corporations, and wealthy families have used it for decades to grow and control their money? In this video, we're going to compare the 401k, the mainstream retirement vehicle, to IBC, a powerful, lesser-known strategy that puts you in control. We'll cover what each one is, how they actually work, and most importantly, why everyone knows about one, and almost no one knows about the other. Stick around. This might change how you think about money forever. The 401k is the go-to retirement plan for the American workforce. On the surface, it sounds solid. You contribute pre-tax dollars, your employer might match some of it, usually no more than 6%, and you let it grow in the stock market until retirement. Simple, right? But let's take a closer look. First, you're not avoiding taxes, you're just deferring them. You're kicking the tax bill down the road, hoping your rate will be lower in retirement. But here's the catch. No one can predict future tax rates, and if taxes go up, so does your future tax burden. Second, your money is locked up. You can't touch it without penalties until you're 59 and a half. And once you hit your 70s, the government forces you to start withdrawing, whether you want to or not. You don't control when you can access it. You don't control how much risk it's exposed to, and you certainly don't control the tax consequences. Third, the fees. You might not see them, but they're there. Management fees, fund fees, advisor fees. Over time, they can eat away 30% or more of your returns. And lastly, the big one, market risk. Your 401k is tied to stocks, which means it can crash right before retirement, during retirement, at the worst possible times when you may not be able to make up the losses. So why is it so popular? Because it was created and pushed by the financial industry. It funnels your money into their system, locks it up for decades, and lets them earn fees whether you win or lose. Wall Street loves the 401k. It's a plan designed to benefit them, not you. And the biggest illusion of all, the 401k makes you feel like you're investing, but in reality, it keeps you dependent, limited, and vulnerable. Now, let's flip the script. Let's talk about infinite banking and how it changes the entire financial game. Infinite banking isn't just a retirement plan. It's a complete strategy for building and using wealth on your terms. At its core, infinite banking uses a special designed whole life insurance policy from a mutual insurance company. But this isn't about the death benefit, although that is part of it. It's about what the policy builds while you're still alive. Cash value. This cash value grows tax deferred, earns guaranteed interest, and receives annual dividends. And unlike your 401k, it's not tied to the ups and downs of the stock market. That means even when the market crashes, your policy keeps growing steadily, predictably, and without interruption. But the real magic of IBC is how you can use the money. Instead of withdrawing funds like you would from a 401k, you borrow against your policy. This allows your full cash value to stay in the policy and continue compounding even while you use that money elsewhere. You can take policy loans for things like buying a vehicle, investing in real estate, paying off high-interest debt, or funding your own business. You're not waiting until you're 59 and a half, and there are no penalties for accessing your own capital. In other words, you're not asking permission to use your money. You're in control of it at all times. And because it's a loan against your policy, not a withdrawal, there are no taxable events. Your money keeps growing, and you're free to recycle that capital over and over again. Infinite banking offers real liquidity, full control, predictable growth, and powerful tax advantages, all without the restrictions and risks that come with a 401k. Plus, your policy is private. It's not part of your reportable income, and in many states, it's protected from lawsuits and creditors. The bottom line is this: with IBC, you don't have to wait for retirement to benefit. You can start using your system now while your money continues to grow. And unlike a 401k, where you're tied to Wall Street, limited by government rules, and dependent on a market that could crash at any moment, infinite banking puts the power back in your hands. So if IBC is this flexible, this powerful, and this secure, why doesn't everybody do it? That's what we will cover next, and what Wall Street and big banks don't want you to hear. So now the big question. If infinite banking is this powerful, why haven't you heard about it until now? The truth is, most people haven't, and that's not by accident. First, let's talk about Wall Street. The financial industry makes billions off of 401k plans. When your money is locked up in mutual funds and retirement accounts, Wall Street earns steady fees, whether your portfolio goes up or down. They don't earn anything when you use your own capital through a private system like infinite banking. And because of that, IBC is never part of their sales script. It doesn't serve their bottom line, it serves yours. Next, most financial advisors and insurance agents aren't trained in how to structure an IBC-style policy. In fact, the average life insurance agent is taught to maximize commissions by minimizing cash value in favor of a larger death benefit. That's great for them, but terrible for you if you want access to capital. Infinite banking flips that model. It reduces commissions in favor of higher early cash value. That takes training, intention, and a client-first mindset, which is rare in the traditional financial world. Then there's the government. Retirement plans like the 401k serve a very specific purpose. They push people to lock up their money for decades, only to pay taxes later. That tax revenue becomes a predictable stream for the IRS in the future. But when you use IBC, you're not dependent on government-sponsored plans. Your money is private, liquid, and tax-advantaged, and they don't get to control how or when you access it. Finally, and maybe most ironically, banks themselves use IBC. It's called BOLI, Bank-Owned Life Insurance. They buy billions of dollars in high cash value, whole life policies because they know it's a safe, predictable, tax-advantaged asset. That's right, banks use the same strategy they never tell you about. They want to be your banker. They don't want you to become your own. But now you know. You've seen the comparison. You've seen the control, the flexibility, and the long-term potential of infinite banking. The only question left is, are you going to stay in the system or start building one that works for you? Next time, we will cover some specific examples, step by step, of exactly how you can use IBC in your everyday life. Make sure to subscribe and share to get the word out about IBC to do your part in building the 10%. More on that later. This is Break Loose Financial, and we will see you in the next video.